This is ShadowQuant, Crypto Edition, brought to you by AresLabs.ai. Before we begin, please note, what you are about to hear is an AI agent panel. All analysis, voices, and production are generated by artificial intelligence. Nothing you hear constitutes financial advice. Always do your own research. Today is Sunday, June 7, 2026, and this is the New York session. Now, let's get into it. The crypto market is caught between a rock and a hard place this week. A 700% spike in Iranian crypto outflows, a CBDC ban in the US Senate, and Bitcoin futures demand falling to 2024 lows. The headlines are a mixed bag. But what's the real story here? Let's dive in. We're entering the week with a mix of technical and macro-driven signals. Bitcoin is up 3.8% on the day, but the fear and greed index is at 14/100 extreme fear. That's a key contradiction. The market is in a state of uncertainty. On the charts, Bitcoin is testing the $62,000 level, a key psychological and technical floor. Ethereum is up 7.4%, suggesting some optimism in the altcoin space. But the big question is, will this be a short-lived bounce or the start of something bigger? The big macro catalysts this week are the US Senate's CBDC ban and the Iranian crypto outflow spike. The CBDC ban is a signal of regulatory caution, but it's not a major sell-off trigger. The Iranian outflows are more about geopolitical risk. If this trend continues, it could push more capital into Bitcoin and stablecoins. But the market is already priced for some level of geopolitical tension. Sentiment is still extremely fearful, and that's going to limit upside unless we see a clear catalyst like a rate cut or a major ETF approval.
On the technical side, Bitcoin is holding above $62,000, which is the 50% Fibonacci retracement level from the March 2026 peak. If it breaks below that, the next major support is $60,000. Ethereum is also in a tight consolidation range, with a key level at $1,600. If Ethereum can break above $1,700, that could signal a stronger altcoin rally. But I'm watching the 200-day moving average for Bitcoin. If it holds, the bears might be forced to cover their shorts. If it falls below, we could see more weakness.
Looking at on-chain data, the Bitcoin network hash rate is holding steady, which is a positive sign. But the recent decline in Bitcoin futures demand to 2024 lows is concerning. That suggests institutional interest is cooling off. However, there's some flow activity in decentralized finance, TVL is rising, and stablecoin flows are positive. That could mean that the market is still finding some support in the decentralized finance space. I'm watching the CME Bitcoin futures open interest. If it continues to decline, that could signal a bearish trend.
The biggest risk this week is the possibility of a short-term correction in Bitcoin. The recent rally has been driven by a combination of fear of missing out and some positive news in the decentralized finance space. But the technical indicators, like the RSI and MACD, are showing signs of overbought conditions. If the market starts to pull back, it could be a good time for longs to cover. Also, the recent spike in Iranian crypto outflows is a wild card. If that continues, it could lead to more volatility in the short term.
This week is a mix of technical and macro factors. The market is in a fragile state, with the fear and greed index still at extreme fear. The key is whether we see a catalyst that can shift the narrative from fear to optimism. The CBDC ban and Iranian outflows are both macro-level risks, but they are not likely to trigger a major move. The technical levels are important, but they are not the only factor. The real story is whether the market can find a new direction, and that depends on the catalysts we see in the coming days.
The key macro catalysts are the CBDC ban and the Iranian outflows. The CBDC ban is a regulatory signal, but it's not a major bearish trigger. The Iranian outflows are a geopolitical risk, but they're not a direct bearish signal. My 24-hour call, Bitcoin bearish, target $61,500 by Friday.
The key technical level to watch is the $62,000 level for Bitcoin. If it holds, the market could continue higher, but if it breaks below, we could see more weakness. My 24-hour call, Bitcoin bearish, target $61,000 by Friday.
The on-chain data shows some signs of support, but the futures data is still bearish. The key is whether the market can hold the $62,000 level. My 24-hour call, Bitcoin neutral, targets $62,500 by Friday.
The biggest risk is a short-term pullback in Bitcoin. The technical indicators are showing overbought conditions, and the recent rally has been driven by fear of missing out. My 24-hour call, Bitcoin bearish, targets $61,000 by Friday.
This week is a mixed bag. The technical levels are important, but the macro factors are still in play. The key is whether the market can find a new direction. My 24-hour call, Bitcoin neutral, targets $62,000 by Friday.
If you're finding value in this analysis, support the project at patreon.com/ShadowQuant. Patrons get early access to every episode, weekly AI analyst scorecards, and daily intelligence briefs. And if you're listening on Spotify, Apple Podcasts, or YouTube, hit that follow button and leave a rating. It helps more traders discover the show. We appreciate you. This content is generated by artificial intelligence and is for informational and entertainment purposes only. It does not constitute financial advice. Crypto markets are highly volatile. Always do your own research before making any investment decisions. That wraps up this edition of ShadowQuant Crypto Edition. Stay tuned for the after-hours session where we will see how these calls play out. Until then, trade safe.